Hi, hello everybody. I'm Sam Simpson. I'm CEO of FounderCatalyst. We are by far the most cost-effective way of getting SEIS and EIS advance assurance and closing your funding round. We produce all the legals you need to do that. So why am I talking through pitch decks? Well, firstly, I'm an exited founder. I grew a company from 0 to 30 million in 4 years and then exited to private equity. I see thousands of pitch decks because I've got investor in my title on LinkedIn, but also with my FounderCatalyst hat on. I see hundreds and hundreds and hundreds of pitch decks a month. I am an angel investor myself, so I've invested in 32 companies now over the last 6.5 years, with about $750,000 deployed. So I see loads of pitch decks, and I get a feel for what's good, the bad, and the ugly as well. So let's have a look at Hati. So we're on the first page, which is a great place to start, I guess. And first impressions are really, really good. I think, firstly, I've spotted it's 17 pages, which is relatively long for a pitch deck. Maybe there'll be some appendices or whatever here. But personally, I want to see more rather than less in a pitch deck. I don't want to get to the end of a pitch deck and think, well, I don't know the answer to A, B, and C. I don't want to have to ask the founder. I think that, there is a school of thought which says that you leave something out of the pitch deck so that the potential investor is going to ask you a question. And first tip of this video is they generally won't ask you that question. Unless they're really excited, they'll just go, I don't really understand it, and then move on. So make sure that your pitch deck is absolutely as comprehensive as you can make it. First impressions here are good, though. I like the color scheme. It's a nice intro. I would say I don't know how to pronounce the name, Hati or Hati. I'm going to say it's Hati. The name is Hati all the way through this, but I'm not really sure, which for an investor doesn't really matter if they're reading the deck. So this is my first review with in conjunction with a pitch. So I'll let you into a little secret in this first video. And the secret is actually an investor starts reviewing a pitch with, before they even open it, they're like, I hope I love this. I hope I want to invest in it. It's great. They're also thinking though, well, I've only got, 20, 30, 50,000 pounds to invest this year. And I'm going to save that for the cream of the crop. So actually, as they're going through the deck, they're looking for the first opportunity not to invest, if that makes sense. So they're looking for either one big thing that's wrong, and that may be, it's in the wrong sector, or it's too late stage, or the valuation is absolutely ridiculous. More on that later. Or it may be a series of challenges. It may be that the slide deck is just scrappy. It may be there's a solo founder and a few other bits and bobs that altogether mean that this isn't perfect. But generally, an investor will open a deck with an open mind and get to the point where they're like, yeah, this isn't for me for either one or a combination of reasons. Or maybe you get through right to the end and the investor's like, yeah, this is brilliant. I want to take it to the next stage, which will genuinely normally be a follow-up conversation. And a conversation around, in this case, you would talk about valuation or whatever is a pressing point. So yeah, first slide started really well. Like it. Let's move along. Okay, reality of dating apps today. This kind of compounds the standard. What is the problem statement? I'm not going to read all of these because this video will be very long. But yeah, I get the problem. Having used dating apps in the distant past, and hopefully I never go back to that. I understand the problem. I know from what I'm reading, some keywords here. Yeah, that kind of resonates with my experience as well. So very good. Challenges. So yeah, this is a continuation of the problem: message overload, quantification, anxiety, and depression. Yeah, it is. Online dating is a rough and tumble experience. So, yeah, all of this resonates with me. Something interesting that I've noticed already, and this is a small thing. Investors do notice little things. So they'll notice, a nice look and feel. I do like the branding of these decks. They're very consistent so far. If you look at the bottom right, though, flipping between the pages, the number 2, so the page number is not correct. So I'm going to be using, by reference, the numbers at the top rather than the numbers on the slide because they are already on slide 3, 2, out of sync. Okay, yet more problem statements. Yeah, fine. So this is where we start. We get past the problem, into the solution, dating apps for intentional daters. Yep, I like that, neat. Everybody can understand that and digest it. And in some ways, this is a really nice first deck to review because, it's not a deep tech talking about, some quantum computing stuff or really, really complex topic. Virtually everybody can understand this space. So every investor will have seen multiple of these decks because it is a relatively busy space in the startup markets. Yeah, I like this. Why Hati? Absolutely nothing at all wrong with this. Like the ghosting penalty, a little harsh. Miss a call or date and you get suspended. I guess, yeah, that gives you motivation to turn up to everything. Really like that as a, I know ghosting's a really big thing in dating apps. So yeah, really like that. The product, yeah, this is interesting. So I really like the fact that they've got screenshots. That brings to life what's the user experience, how does it work, how polished is it going to be. Obviously, that's not possible for lots of propositions, but in this kind of space for an app, even if you've not built the app, you should absolutely have mock-ups. And yeah, I think the slide's really powerful. Actually, here we are again. Hati in purchase and revenue opportunity. So this is talking about the business model, how they earn money. Yep. Solid so far. Target addressable market. Yeah, I mean, an angel investor, if they're interested and keen, may want to double check these, but this is kind of the obligatory slide. We're on slide 8 again, I suspect. Yeah, okay, we've got lots of slide 8s. So UK dating market. Yeah, this makes sense. I mean, the 100,000 at the end here is my my instant feeling is, we'll prove it. How are you going to get to 100,000? I guess they've got execution over the next few slides, or at least I hope so. But yeah, that's a pretty promising, that's a pretty big, audacious claim, and I would want some kind of evidence for that. Hopefully, we're coming for that in a minute anyway. Revenue model. Okay, yeah. So this is showing by percentage. Okay, yeah. This is showing by percentage of users how they expect to make money. So 10% users will have no dates and no paid. Yeah. Okay. I understand the slide. I think maybe there's probably a better way of showing, but I understand the slide after a few glances. What's interesting here at the revenue model at all is, yeah, traditional dating apps rely on monetizing 6% of users through subscription and upgrades, generating £400 a user, whereas we're going to do an average of £97 per user, which is great. Now, if that's a really interesting claim, I think, you know, the obvious answer to that is, well, if it were trivial to take money out of wallets of people that are on dating sites, then everybody would be doing it. So hopefully in the next slides, there's an explanation of exactly how you're going to do that. Why are people going to spend more money with you? And it's considerably more money, 7 or 8 times the money with this platform than they do with every other dating app. I think that's really key. If you can prove that, then that's great. Otherwise I think this slide is going to be challenging. The other thing that jumps out, and having used a dating app for short term in my own life, is they are relatively short term, or they should be. If the platform's successful, a data, as they call them on this deck, should only be a short term engagement. It shouldn't take, if you're on the site for 5 years, then you'd have probably given up at that point and used something else. So I suspect the lifetime value on this from this service should be relatively low, because people are either going to be on the site for a year or two, find somebody and then leave the site, or they're going to be on the site a year or two and not find somebody and give up and try other sites. So it's really interesting whether that kind of long-term value aspect has been addressed anywhere in the slide deck. Anyway, there's nothing fundamentally wrong with this slide. I think it could be presented in a different way. Slide 12. This is interesting. So this feels out of place for me. I think we've had the problem, we've had the solution. Yeah, I don't really understand what this slide is saying. You've got to kind of, for every slide in the deck as a founder, just say, why does my investor care about this? This feels disjointed. It feels like we've done the problem and the solution, we've moved on and we're coming back to it. So maybe this needs to go earlier in the deck. I genuinely can't see any value this is adding. Maybe one for the appendix. Power of voice. Okay. Yeah, again, I think this needs to be connected with the previous slide. I would even move this to appendix and drop it again. Okay, everybody loves a roadmap slide. And I see so many pitch decks that miss, they don't tell you what they've done or what they're going to do. I think this covers both because it kind of starts on the middle of the funding round. Okay, I mean, this is very, very simplistic. There's lots of clear space here. I think you could absolutely fill this with more detail, and you could, I think this just needs a bit more effort put into the next steps. And this, for me, this needs to be a mixture of commercial milestones or product milestones and of fundraising milestones. I think you can combine those all in this slide. And I think it's a first attempt. It just feels light based upon the content. But I do love the fact there is a roadmap. And I love the fact it's one slide for looking back and looking forward. I think that's really, really powerful. What is the raise for? Something interesting's happened, between slide 14 and 15, just caught my eye as I flipped. You can see, hopefully, that the background, the watermark on the back of the slides flipping around is a really small thing. It's like the page numbering. And generally, I love the look and feel. It's very consistent, very well branded. But, just the hopping watermark in the back isn't great. So, but trivial to fix, I'm sure. So we are raising 150 plus 250. So we're raising 400. So there's a few problems with the slide. Firstly, this slide says you're raising 450, but I can only add 400 on the top two numbers there. If you're raising 450 and you want 50k contingency, fine, but make sure you put it on the slide. And then at the bottom of the slide, those numbers don't add up to the numbers above it either. So if you look at the, for example, on the right, you've got 100 plus 50 plus 50. That adds up to 200. Yeah, and the left doesn't add up either. So the numbers aren't right for one reason or another. It may be that contingency is built into the difference between the 400 and the 450 and the numbers below. That would be really weird. Personally, I would put all of these numbers into a pie chart, a use of funds chart, as HMRC love to see as part of the advance assurance. What's the next slide? Okay, so we've jumped onto team. I mean, personally, I prefer team in front of the ask slide, but I won't die in a ditch over that one. This doesn't mention the company's superpower though. So if you're fundraising in the UK, if you're fundraising in the UK, then at this stage, you're pre-product, pre-revenue, your superpower is SEIS and EIS because you'll be fundraising from angel investors. You don't mention that at all on this slide deck, and therefore that's a problem. And thinking about the 450, so I'm not here to talk about valuation and deep dive, and actually the slide, and as far as I can tell, the deck doesn't mention valuation at all, at least to this point. Something an investor will be doing in their mind, if you don't mention a valuation, and this is top tip number 2, really, I guess, an investor in their head will be saying, right, we are raising 450. I expect the average dilution to be between 15 and 20%. If it's much less than that, then something's very wrong. And if it's more than that, then I'd be worried about you getting over diluted. So, the normal range that an investor would expect is 15 to 20%, which gives a valuation range between 2.5 million and 1.8 million, respectively, for the 15 and 20%. 2.5 million would be punchy for this based upon, it's pre-seed, pre-revenue, and the product isn't even built. So your investors are taking a really good chunk of risk to develop the product. They're paying for the development as well as everything else. I think 2.5 million would be incredibly punchy. I think 1.8 million would be much more like it for 20% dilution. I mean, it doesn't really matter whether you show your valuation on this page or not. An investor's just going to go through that thought process. And like I say, 1.8 million valuation sounds about right, maybe a little high. 2.5 million is, for me, would be too high. So I saw the team slide already. This looks really good. I love a good team slide, and I love the personality here. So you've got each of the founders' pictures. That's really good. Serial failed data. So I like some of the personality and some of that content here. I like the background, really, really good. Name dropping some interesting names in there. Again, more personality at the bottom, marathon runner and that kind of thing. What would be great here, just one thing missing, I think, for me, would be a link to the LinkedIn profile or whatever for each of the founders. Quite often, investors love to validate what's on the page. So for this kind of page, people want to go and look at, the LinkedIn for each of the founders to check that the history matches each of the descriptions here. And what's next? Okay, right, we're done. Well, that was very, very quick. I mean, overall, I really, really love the deck. Certainly, it's in the top 10 that I see. There's a few issues. There's a few look and feel issues with, slide numbers and things bouncing around. Overall, I must say, I love the font choice. I love the look and feel. I love when it's fixed, the consistent branding of the slides. I think there's a pretty clear ask. So, reflecting on what's missing, let me wind back. So, I don't think I've seen a forecast. Yeah, I've not seen a forecast. So, every angel investor is going to expect a forecast. You can't avoid it. So you've just got to put it there, and it will be the usual: what's our revenue and what's our EBIT usually, and make sure the forecast is long enough to make your proposition look attractive. So, I see lots of people who produce a 3-year forecast. Just to kind of meet HMRC's expectations, and it's showing negative EBIT, negative EBIT, negative EBIT. Well, that's not looking great from an investor point of view. So if you're still at negative EBIT after 3 years, just extend it to 5 years or whatever, so that the inevitable revenue and EBIT hockey stick takes place. It's got to feel like a compelling proposition to your investors. One thing that, none of these are advisors, so I can see no advisors. I mean, this looks like a fairly experienced team, which is always great to see, and it gives me comfort as an investor. But it would be great to see if they got any NEDs or advisors supporting them and shoring up where these founders may be a little weaker. So, we've got 2 techies and a pretty well-rounded co-founder as well. But, if there's any weak points here, so maybe go-to-market's weak, or maybe operational, or whatever it happens to be, somebody with some industry experience to plug the gaps that these 3 founders may not have. Don't think I've seen anything on customer acquisition cost, which I think ties into we were talking earlier about a customer retention issue potentially and a long-term value. I mean, maybe as a thought for the founders, there's a way of maintaining the relationship with people even once they've found their match. So potentially you can offer additional services to maintain that relationship with the customer, rather than when they meet somebody they instantly drop off the app and you kind of lose that customer forever. I would like a long-term customer acquisition strategy. I think there's something in this slide here around customer acquisition on the left, but this feels like all kind of launchy guerrilla market, how are we going to get going type, big bang customer acquisition. What is the long-term customer acquisition strategy? How do you incentivize, customers you've already got on the platform to refer others and things like that? I don't feel like I understand how that works long-term. Now, there's no exit slide as well, actually. No exit slide at all. I mean, everybody knows this. Everybody who invests vaguely in this space knows that there's one massive acquirer in the space. As soon as you get to a decent number of users, you're going to get an offer from the obvious players in this space. So I don't think an exit strategy slide is necessary at all. So that's it for this review. Really enjoyed my first review. The bar is set really, really high with this first review. So looking forward to doing many more.